Grow CFO is where finance leaders grow together. Join thousands of like-minded professionals using Grow CFO to access the combined knowledge and experience of the finance leader community. You can join us today at growcfo.net. Hello and welcome to the Grow CFO show. I'm your host, Kevin Appleby, and today I've got Bill Genovese with me. Bill is not a CFO, he's a CIO or a CTO, and we're going to take a look today at digital convergence between the CFO and the CIO. Bill, welcome to the Grow CFO show.
Thank you, Kevin, for having me. Pleasure to be here.
Bill, tell me a little bit about you before we get into the subject. What's your background?
Sure. My career, depending on when I start the clock and really officially count the years and days that are career aligned, it's anywhere between 26 and 28 years in the industry at the convergence or the cross section, I would say, of IT as an overarching career discipline and one primary vertical industry, which has been financial services, covering banking, traditional retail, commercial banking, investment banking, and insurers, and diversified capital markets as well in that bucket. And I've primarily worked, I would say, 80 to 90% on the provider side, with companies providing either management consulting, IT consulting, managed services, solutions into that industry vertical. And then I have worked in the industry directly as well. I used to work for Wachovia Bank, earlier career, which is now Wells Fargo, after several mergers, and started my career in real estate at Coldwell Banker in finance and accounting. So I started early on as a logistics analyst and then got promoted to a financial analyst and moved to California where their headquarters were and developed a number of solutions sitting between the controller's office and IT for reporting, for management reporting. So that's what started me on my journey. And I've had the luck, experience. I'm extremely grateful and filled with gratitude that I've lived and worked in 6 countries and 4 states throughout my 27-year career. So very happy about that. I have been, like you said, I've never been a CFO, but I've always worked with CFOs, developed solutions for CFOs, and I've been a 4-time CIO and CTO in smaller to mid-sized companies. And now I'm with a company called Kyndryl, and a lot of people don't know us by name, but we are a former IBM division that was carved out and spun out. We used to be IBM Global Technology Services, and I worked in that division. I was 11 years with IBM, second generation. My dad spent nearly 30 years with IBM. So between both of us, we've got a half a century in Big Blue. And I worked in that division, IBM Global Technology Services, which is the world's largest, or was the world's largest managed services provider for outsourcing for a number of industry verticals. And now we're Kyndryl, and very exciting. We're completely independent from IBM, but we're obviously still an IBM partner, but we're partners with everybody. So Google, Amazon, Microsoft. I'm driving a number of partnerships. I work very actively in quantum computing. So we have a quantum startup business unit where I'm a senior member, trying to get that going. And that's kind of me.
Brilliant. We have a slight convergence in career there because I was briefly part of Big Blue. I was part of the PwC consulting business that was acquired. We came in, we were called Light Blue at the time, but actually in there it was probably less than a year.
That's where I started, actually, Kevin. I started in GBS in 2004, March of 2004, and that's right around the time when Ginny Rometty, who was the CEO, acquired PwC.
Yeah.
And here was me coming in from, at that time, Bearing Point, which I went through the whole journey with P. Then the SEC said, oh, no, you can't be consulting and providing assurance and audit to CFOs. So you got to split out, be separate. So we became KPMG Consulting. No, that's still not good enough. That's not independent enough. We became Bearing Point. So I was through that whole journey, joined IBM, and then I sat on the sidelines for a little bit there watching the cultural battles between PwC employees being absorbed and traditional IBMers, traditional Big Blue. And here's me, an ex-KPMG guy. So I went through that whole period of osmosis.
I remember that time well, and I was one of the people on that cultural thing that just didn't fit the new organization. So I went off elsewhere. But we're here, Bill, to talk about digital convergence. Probably the
Yeah.
biggest subject around in finance at the moment is finance transformation, digitizing the finance function, automating, artificial intelligence, and so on. What do you mean by digital convergence?
There's a great chart that I use, and basically it's a pictorial image of overlapping circles. And the circles, and each of the center of the circles are ovals and circular patterns that represent technologies. Around the perimeter of the circles that are overlapping are finance functions, reporting, transaction processing, so on and so forth. There's about 20 to 30 of them. They are mapped to each of those technologies. The takeaway from that diagram is those technologies are not mapped on a one-to-one basis to functions. They're overlapping.
Oh, absolutely. Yes.
So my point is, to solve a business problem for the CFO, you're not going to pick one technology out of the box. Now, as humans, we think in very binary fashion, zeros and ones, black and white. When it comes to solving a business problem, we want to get to the perfect solution and pick either A, B, or C. That's not reality. And if you look at how technology has shifted in terms of a paradigm over the decades, there were no big bangs. We didn't wake up all of a sudden and we have something brand new to access information. It was a transgression and a gradual convergence of technologies to get where we are today. Look at the smartphone as an example. That just didn't appear. I remember walking around with the clunky Motorola brick in my hands. I was in,
remember walking around with a brick in my hand that was a mobile phone.
and you had the car kit.
And a very primitive digital organizer. And
Yeah.
I always said, probably an ancient laptop as well. I always think, why can't somebody just put all of this on one device?
I remember that I still have somewhere in a box in my clutter in my office here a Palm Pilot, an
Yeah,
original Palm Pilot.
yeah.
So,
That was exactly the organizer I had. Yeah.
yeah, that's my point. So, from a business solution perspective for the CFO and his or her organization, those organizations that are rapidly scaling and maturing are seeing the convergence of technology and they're aligning to that and adopting to that holistically. Now, the other influencing part that shapes the number of functions that go to those technology solution bubbles or circles is hype. Now, the latest flavor of hype right now in terms of a technology is generative AI,
Yeah.
Chat GPT. And enterprises want to get involved, use it for enterprise search, combine unstructured data outside the enterprise with structured data in corporate systems that they have inside. But once again, that's a convergence play, especially even from a data model and data source perspective, because all of the cloud providers have their own flavors of generative AI data models for search. So they have their own views on it. So as a CFO and CIO working in tandem with the CFO, where do you go for the best fit solution? So it's never the starting point in terms of the theme. It's never either or. It's a combination of a number of technologies across your CFO function process suite problem set that you need to solve to have a best fit.
If you think about finance systems, just truly finance systems these days, you're increasingly coming just to the general ledger, which is the system that receives all the transactions. Nearly every financial transaction is starting somewhere else. It's starting in payroll, it's starting in the sales system, the expense system. And I'm certainly seeing systems where bits of solution A are also present in solution B, but we're not using solution B for that. We've brought solution B in for something completely different. And there's this overlap. So there's this trade-off between which bits of various technologies you turn on or turn off.
That's a very good point. And that's actually what started my career and my interest in a number of areas. Because when I joined IBM from KPMG, I joined the ERP application solution practice, Oracle, for financial services institutions as customers. And I started that journey in actually KPMG and then Bearing Point, implementing very large global Oracle implementations around the world. And this was always a challenge because CFOs controllers, accounting vice presidents, senior vice presidents. They went to the general ledger as a single source of truth, but it didn't have the corresponding detail that they needed. And hence, that's how ERP was born. You had an integration of accounts payable, accounts receivable, supply chain management, supply chain financing, procure to pay, and it weaved all of these processes and functions together to populate the GL, or at least from a workflow perspective and audit perspective, show how that line item, that journal entry was created. And these companies, Oracle, SAP, PeopleSoft, which later was gobbled up by Oracle, they developed flex fields. Dynamic, they were called DFFs or something along those lines, where you can add additional updated detail information, invoice supporting emails, so on and so forth. And then right back to the general ledger journal entry, you can drill into that custom flex field information that you added to get that supporting detail. This is in the time frame I'm talking about is 2001-ish to 4-ish. So where are we now? 2023. That's 20 years ago. The other point I want to bring out in this discussion, we're always going, for lack of a better term, back to the future.
Yes.
So if you look at generative AI, it's trying to solve the same problem as what I just framed up there. Our corporate systems for the CFO have 85% of the information that's needed in the enterprise. They have to go outside the enterprise. They have to look at email. They have to look at messaging workflow. How do I fill the gap in terms of audit and supporting information? Generative AI comes in and does that. And then there's companies, for example, that I'm working with that are very creatively working across all of the models, the generative AI models, coming up with the best fit answer based on the prompt or the request. And then here's the magic sauce, recursively writing back to the source system where that information is missing that the company was looking for externally to find. And that's the same solution problem solving set that we were struggling with in the early 2000s with ERP.
And I look back to the same period and see in finance, the same problems we were struggling with back then are the same problems we've got now. We're always talking in Grow CFO about a faster month end. We had a service back in PwC Consulting 2003, 2004 called Fast Load.
Yeah, I remember that. Yep.
We called it iAnalytics, where we were doing a lot of the things that, say, FP&A are doing these days. But a thing that I was involved in there was better budgeting. How do you avoid having 14, 15 versions of the budget taking forever to put together as you change the numbers and change the numbers again and change them a third time, fourth time, fifth time? Problem is still the same today.
Absolutely. We can talk about that aspect from a budgeting, forecasting, multidimensional reporting perspective, regulatory, managerial, corporate reporting perspective. We can spend the rest of the hour alone on that. I was on when Credit Suisse Group went public in 1999, 2000 to 2001. KPMG was leading that program in Zurich to prepare them for regulatory reporting so they can go public on the New York Stock Exchange. It was taking them through integrated macro workbooks and Excel worksheets 2 to 3 months to report. Inexcusable. It's the same dilemma. And so my team was in there to make matters even more complicated. During that whole exercise, they decided to go out and acquire an insurance company, Winterthur. So you're having challenges reporting in an automated fashion. And at the same time, you're going a massive M&A activity too. So very interesting times. But these situations we're constantly revisiting. And the ERP and the transformation of core business systems has helped, but it's still not full circle.
But one of the things we said we were going to talk about today was how should the CFO and the CIO partner? That's right.
That's right. And one thing that I've been fairly successful at throughout my career, and part of it's been I've gravitated to the space in terms of interest and passion, is around regulatory type projects and mandates and compliance, risk and compliance. So I've implemented Basel for banks, Basel II for Wachovia Bank. And enterprises, typically from the CFO perspective, have to budget for these. And usually it's not a proactive measure. It's usually as a result of a fine or a hand slapping exercise in where the bank did something wrong. And it's okay, well, we've got to pay the fine. And to avoid paying the fine next budget cycle, we're going to earmark several $1,000,000 to come up with a enterprise risk solution. However, where the overlap and convergence helps in terms of the partnership is that money, in terms of the mandated requirement to meet compliance by the CFO, and the CIO has to do that. Instead of the CIO looking at it like this is an operating expense, I've got to do this next budget cycle, they can look at the benefits of that investment as aligned to digital transformation. So I use the example of Basel II all the time because that bank, instead of offering just an updated solution to reflect the bank's new product set to customers, where the quants who calculate the risk reserves for the bank, they implemented an enterprise-wide data warehouse. And they put on top of it, with IBM's help at the time, a business intelligence layer for analytics. What that was doing for the lines of business who never had access to see that information, they were seeing customer data in terms of risk appetite against certain product sets. So what you have there, Kevin, is a collaboration. Now, maybe the CIO was struggling with multiple vendors throughout the years, and Salesforce is in there, MicroStrategy is in the bank. Any bank's got 3 or 4 Tableau, SaaS. Any bank has got 3 or 4 BI analytics vendors in there that business unit ABC wants to use to get better insights about how customers are choosing products. Once this solution was standardized using SAS, Cognos, and Teradata and unleashed to the business units, there was an outcome benefit of digital transformation and improved customer insights while also meeting the risk compliance mandate. So what you have there is a play, and this is not realized enough in the industry. What you have there is a play of cost avoidance. So instead of earmarking or budgeting for a compliance mandate, more often than not reactively, you have that money that can also be shifted to digital transformation and positive revenue enhancement and outcomes.
Yeah, and that's something well worth remembering, that cost avoidance isn't necessarily not do a project, isn't necessarily cut things. It's about spending money in the intelligent places. So broadly then, if you're working on a project, how does your relationship with the CFO tend to work, Bill?
Well, a lot of it has to do with the challenges I have now and with my company now is brand and brand strategy. We're perceived based on how we were born as IT providers, strategic outsourcing, managed services, working in infrastructure. And the typical traditional entry point for us to get as close to the CFO as possible through other members of the C-suite, which are the CTO and the CIO, is cost reduction. But again, based on my background, my experience, my skills, I'm trying to turn that angle to get closer to other members of the C-suite, either the chief risk officer, the chief financial officer, chief strategy officer, chief innovation officer, so on and so forth, by saying, look, your legacy modernization, moving off mainframe to cloud services, wanting to look at uncoupling the benefits of generative AI to cover gaps in your core business systems, again, is a cost avoidance play. You've got a large amount, Mr. or Mrs. CFO, of technical debt you're carrying on your balance sheet. That's interesting. I'm getting clobbered by MIPS costs to run processing on the mainframe. How can I reduce that while also becoming more agile and getting access to further insights and information externally? Move to cloud. And then the discussion kind of shifts to, what's your cloud strategy? What are you thinking about along these lines? And it doesn't always have to be, again, one specific cloud provider. We're not married as a company to a single provider, so we work across all of them. And from an AI ML perspective, we can weave together solutions across all of them as well. So
That's interesting. You're looking at working across several clouds. I suppose from a personal point of view, I get that because I'm sitting here, I'm talking to you, recording this podcast, recording via a MacBook. So automatically, I've got Apple's cloud service. Our company files are kept in Google. Personal stuff, I've got a Dropbox account. I'm sure somewhere or other I must use Amazon, AWS. So
Right.
from a personal point of view, there's 4 clouds straight off. Goodness knows where the data is being held on lots of those applications that are sitting on your phone or your iPad or whatever. They're nearly all sitting in a cloud somewhere. So I
Right.
suppose from a corporate point of view, looking across a whole number of cloud providers makes sense. Where does that put you from a risk point of view, Bill? Because that must mean the data isn't just securely sitting inside one cloud, it must be moving between them.
Correct. And we have I'm also CISSP certified. So in terms of cybersecurity, certified information security professional. And you have to be, I'm not saying you have to be certified, but obviously if you're working with banks for nearly 3 decades globally, you need to be addressing these concerns. And we do as a company, and this goes back to our IBM days, we have a very deep and robust security and resiliency practice area. Our approach, and as we're moving into quantum computing, that's one of the questions that keeps popping up that we're starting to get questions from our clients on. How do I become quantum safe so I don't get my information decrypted or stolen and then decrypted later when there's access by a rogue individual or nation state to decrypt it? So we have maturity models. We work with clients in terms of the latest viewpoints, frameworks, mandates, policies from NIST, the US government and other governments around the world in terms of implementing a zero trust based architecture for cybersecurity. A zero trust architecture and blueprint addresses all of the concerns you brought up because you have employees coming into organizations and, for lack of a better term, enterprises, including many banks, have thrown their hands up and said, I can't build a security policy deep and robust enough for Apple on its own, Samsung on its own, and smartphone, Google phone as a third variant, and anything else under the sun. So there had to be a need to have a broader and deep enough security policy and posture that covers BYOD, bring your own device in. And through third parties and a zero trust architecture, that's moved forward quite nicely. And in fact, what a lot of our partners are doing now as we're looking closer at quantum, they're highlighting certain gaps in even zero trust that institutions haven't looked close enough at. As an example, I'll give you an example. So cryptography schemes. The big concern or hullabaloo around quantum computers is they can break encryption that's been around for 5 decades. RSA 256. You go into any bank and talk to the CISO and the CIO. Do you have an inventory of your cryptography schemes and algorithms? No,
Yeah.
nobody has that. No one. I'll spin it around more fundamentally. We're talking to partners, as an example, on key generation and distribution. If somebody gets a hold of a quantum computer and wants to decrypt you, one of the first attack vectors and vulnerability points is going to be on your keys. And specifically, contextually, your device, Kevin, that you bring into work every day, your keys generated by your Apple or your Samsung phone. Fundamentally, on the other side of that, which is a problem, we're talking about problems that still haven't been solved, are website certificate keys expiring, and these are tracked on spreadsheets in major banks. These are 2 contextual examples of where quantum, in terms of vulnerability, will attack first. Key generation and distribution. So if you're bringing your phone in, you're accessing corporate email, corporate payroll potentially, other corporate systems, your keys are vulnerable. There's the entry point for a quantum computer to access corporate systems right through your device. So what I'm saying is emerging technology converging is forcing further compliance and risk for holes that have existed for years that we didn't have to worry about or we put to the wayside. So as companies move further into the cloud, it's only going to grow exponentially, the risk, and become magnified.
Bill, I'm thinking about a lot of our listeners could be with smaller companies. CFO may well be the person who's looking after the technology. Doesn't actually have there's no such thing as a CTO or a CIO on the C-suite. At what sort of stage do you think in a company's growth does it become vital that the CFO steps away from that role and has a proper technical partner?
Yeah, I would say reliance on outside vendors and partners. And what's driving the outside reliance and dependency on external partners and parties would be data. So if you look at a pie chart and you look at analyzing all of the data that you need to run your business to grow profitably, keep costs at bay, how much are you able to consume within your four walls to do that versus what you need externally from partners? And once that pie chart tilts at least north of 35-40% externally, and you don't have insights on that from a risk perspective, I'd say start looking.
Yeah. Okay, good advice. Brilliant. So, Bill, we've been talking a lot about the CFO-CIO partnership for digital convergence. Now, you've written an article on that, which
Yep.
allows people to dive deeper. Where would people find that article?
It's still out there. I just looked at the link. It's in a publication called CFO-CIO.com. Contacted me back in 2015-16 for a series of articles. And this made it into their April 2016 online edition, multi-page article. And I picked that one out as a framing for our discussion here because it directly talks about what we're talking about here.
Yeah.
Again, even if you look at the title of the publication, CFO Tech Outlook, it's saying the CFO must work with technology and the CIO and CTO to come up with a better outlook.
Yeah.
So,
Brilliant. So we'll put a link to that article in the show
mm,
notes. Anybody that wants to delve into that much deeper, then it's there as a resource. But Bill, I was looking at your LinkedIn profile and you've got about 80 publications listed there. Tell me a little bit more about the other things that people can find out from you.
I'm a passionate nut, for lack of a better term, on emerging technology and digital transformation and what enables that. The other thing, too, from a purist perspective, I hate the words that are thrown around that are filled with hype. And one of the ones that, since it was born, digital transformation and what that means. And the biggest mistake CFOs, CIOs make, and other members of enterprises make is digital transformation is a technology solution. Couldn't be further from the truth. There's a number of articles on my profile around mindset and culture. So organizations have to change their culture and their mindset to really get the benefit of a digital transformation. And so there's a number of articles and viewpoints on that. But the overarching theme through the 80 articles is either organizational, technology, functional convergence. Again, and that's how I've gravitated to quantum computing, because quantum computing, in terms of a compute model, is based on physics. It's not binary thinking. So the solution is not forced to be 0 or 1. It could be 0 and 1. So we all have to get comfortable with the gray. And the gray is the only way we've moved forward as humanity.
Yeah.
Never black and white. So that's the overarching theme. I've taught at universities. I was based in China working for Huawei as vice president of corporate strategy for global banking and financial markets, that industry vertical. We can spend another hour just talking about that 4-year experience in the middle of the trade war and COVID. So, as an American leading that for a Chinese company, I mean,
And the
you know,
American attitude, that particular company was one that perhaps we shouldn't be doing business with.
again, we can talk at length about that and my perspective and what went on there. But that only reinforced my thinking and mindset in terms of convergence and what's going on, especially when you have the overarching view of the East versus the West and how things are tackled. So I was invited while I was living and working there to be an adjunct presenter at the University of Hong Kong. So in my LinkedIn publications, there's a number of recorded sessions that I did for the school that readers or listeners can listen to. And I delved into a 6 or 8 part series with Huawei on digital transformation, AI, machine learning, blockchain, quantum computing. So there's a number of articles there. And like I said, this has been a passion throughout my career, and I've been blessed and lucky to have lived in all of these places and seen different things and what works and what doesn't.
Brilliant. Bill, I'm sure we're going to have to record another podcast at some point that covers some of that stuff, but
Mm-hmm.
we're running out of time now. And it's been super to have you as a guest on this week's Grow CFO show. Thank you very much.
And I appreciate, Kevin, very much the invitation and opportunity to do this. I love talking about where I've been, what I've seen, what I've done, and sharing it with others. So hopefully it benefits them.
Let's hope so. Thank you again, Bill.
Thank you.